All right, everyone, welcome to FOMC Week's Volatility. We have the meeting tomorrow. It will be the most important meeting we've had of the year, and we certainly could see them signal a cut in the near-term future, and that is the reason we got this dump on Bitcoin. There's a lot of uncertainty in the markets. There's a lot of anticipation for this meeting. There's a lot of trades being opened and a lot of liquidity in the market for market makers to grab, and while this dump certainly puts price into make-or-break levels, we don't want to just continue going down here. If we start closing candles back below, $60,000, that cannot be a bullish correction. We do have to hold around where we are right now. There's one more level to the downside that we'll get into. But first, let's talk about that Fed meeting that is happening tomorrow. And not only do we have the federal funds rate and the FOMC press conference tomorrow, but they are also releasing CPI numbers the same day. So tomorrow is going to be especially volatile. You got CPI volatility combined with FOMC. I'm not surprised we are seeing price react violently to the anticipation of these numbers coming out tomorrow. And because it is such a big day, I will make sure to do a live stream on this channel starting at 1 p.m. EST. So make sure you do not miss out on that. We'll be watching the press conference live and going over all of my thoughts, reacting to price action because it should be incredibly volatile tomorrow. Tomorrow is not the day you want to trade. It's just time to grab some popcorn, watch the volatility play out. And then after this week, markets will digest the numbers and then Bitcoin will properly choose the direction it wants to go, which in my opinion is still to the upside no matter what the data says tomorrow, because even if the Fed does signal they are going to pivot in July, which would indicate the top is going to come in a lot sooner than I would have hoped, right? We could see that top in July because historically the Fed pivot, the Fed cut marks macro tops for markets. Retail assumes otherwise, and that is why you see max euphoria. You see enthusiasm in the markets leading up into that Fed cut. So if they signal for sure that they will be cutting in July or even September, we could see price react extremely bullish and for us to just launch up into a blow off top, because when you're nearing the end of parabolas, price moves extremely quick. You look at something like your altcoin seasons of previous cycles and it all happens very fast. It can happen within 2 weeks. You have your entire run in the altcoin market and then you only have 2 weeks to sell before it crashes. You got to understand things can move very fast in the market, and I do anticipate it will be no different this time around, and we could see that altcoin just rip into price discovery following this week into when the Fed actually does cut, and then that's when we need to be really worried, and we do need to be getting out of the market at that time because that will be used as exit liquidity in my opinion. And if we do look at CME Group's Fed rate cut predictions, they are extremely accurate on predicting when the Fed will pivot. They are not expecting anything tomorrow, so I would not be worried about them cutting tomorrow, even though Canada and Europe has already started their cutting cycle, which is something to note for sure, because it definitely tells us we're getting into those times where they're needing to stimulate the economy because something is broken in the economy. But in true American corrupt political fashion, we like to hold off rate cuts until the very last second when we're in dire need of stimulating the economy to hold it up for potentially that election season. And I think they're going to prop up markets as long as possible, and then when you finally see that rate cut, everything is just going to come crashing down and we're going to enter the next Great Depression. But until then, the market should be propped up, and I do expect that bullish rally to continue until the Fed cuts. So if it's not going to be June, is it going to be July? And we can see here 91% they're still going to be paused in July. So depending on what they say in the meeting is going to dictate what these percentages do, and we'll be watching this very closely on this channel and in my Discord to see if any of this changes. But as of now, it looks like September is going to be the month, but it is really 50-50 here. So depending on what they say tomorrow, it could be much more likely that they're going to cut in September, or it could be predicted that they're still going to be pushing it off into November. It's been very undecisive when the Fed is going to pivot, and they have been pushing it back throughout this year. So I would not be surprised if they actually continue to push it back and we do go all the way out to November. What does this mean for markets? Well, if they do push it out to November, we would likely see a slower uptrend in the short term going into that parabola later on. Whereas if they start signaling like, hey, it's definitely going to be September, possibly even July, then we could see markets just rip to the upside, go completely vertical, which would pull back our targets for that top coming in, and we could actually top out more of in the summertime versus election time. So we do want to be watching this closely. This is my number one indication on when the markets will top. It historically has been fairly accurate in determining that. But enough Fed talk. Let's jump into the Bitcoin price action and talk about this massive dump that we are about to close on the daily candle. And there's two things that I immediately really like to see here. First things first, you can see we have wicked off of our lows pretty violently, getting back above the daily EMA. Historically, in a bull run, you always want to be holding this daily EMA. Backtesting it as support before continuing higher is not a bad thing to do. You will also notice this candle is pink. What is that? Well, it is the highest volume vector candle you can have. Essentially, that high volume indicates that this candle is extremely likely to get retraced. You see, historically, when you have vectors within a range, they get retraced almost immediately. You can see here, pink vectors to the downside, ripping back up to retrace those. You can see this down below here, pink vectors to the downside, deviating out of the range, ripping back to the upside. Every one of these daily pink vector candles, you have gone ahead and retraced back to the upside when they have happened within a range. So I would not be surprised if we do just rip straight back to the upside during tomorrow's candle. But jumping in here to an hourly time frame, we do have this sweep level that I've been talking about for some time, and we are getting down close to that level. You can see we did grab some liquidity from back here, but if we do go ahead and grab the second liquidity before flying to the upside, this would go along well with a Fed volatility day tomorrow. So I would not be surprised at all if going into tomorrow, we kind of just trade sideways within this range. And then when we have the CPI numbers, the Fed funds rate, the Fed meeting, all of those volatile news events, we will probably see a lot of price manipulation, and I would not be surprised if we grab liquidity from both sides, but inevitably ending up higher after the volatility. So I mentioned leverage positions would not be a good idea tomorrow, and they're really not the best idea anytime during FOMC week or CPI week, and that could have been a reason as to why you shouldn't have taken this golden pocket retracement here. I said this was a valid trade to take as long as you had a clear invalidation. You're entering here, you are stopping yourself out here, and as long as you took that trade with an amount of money you were happy to lose to learn, then you should not feel bad about taking that at all. All you can learn for next time is potentially wait for price to actually come into the golden pocket and make sure there is a bullish backtest of the levels before taking the trade. Wait for structure to form, wait to see your footprint order flow, and making sure to actually be there when you're taking the trade to understand if price action is truly bullish instead of just placing in blind limits. And that is what I did. I was looking to potentially take a long within this area, but I always wait. I don't just put in blind limits. So that is something you could definitely take away from this trade if you did lose on it. Another thing would be, hey, maybe take out those limits when we are going into CPI day or FOMC day, because you know liquidity is going to get grabbed from both sides. So no matter which way you are entering, it is most likely going to get stopped out, and it's not really worth keeping that order in the order books. So no problem if you lost some money entering positions in this range. It's all about learning from your losers and not getting upset and revenge trading. As long as you're keeping a cool head and just learning from your mistakes, you will inevitably become profitable over time. When we jump into trading light here, we can see there is single prints all over the place. These are all these green lines that extend out from previous price action. This essentially is fast moving price during the daily sessions, and these imbalances often act as support and resistance. And I actually did go ahead and attempt a long position yesterday within this untested single print. I saw that that golden pocket was not going to hold, but I was still extremely bullish. So I was like, hey, let me go ahead and take a shot. I entered within the single prints, and then as soon as we had accepted outside of these single prints, I put my stop at entry, and that way I was not risking any money. And even though I was wrong on the position, I got stopped out at entry, and I wasn't really risking a lot on that position anyway, because I knew this wasn't extremely bullish because their long liquidations within this wick was not high, and you did not have a good failed auction at this level. So that was more of something I took just to learn, because the best thing you can do is trade as much as possible to get as much data as you can on your positions, because that is how you're going to learn and build fractal recognition. Now jumping into current price action on these single prints, you can see we are filling into these tails. You'll notice that the single print tails are less bright than the actual single prints. So essentially the tails are made by wicks, as you can see down here, right? Whenever we wick through the market, that creates tails on the single prints. So I just wanted to point out that difference, why they are different colors. And we are finding support towards the end of these tails with a proper failed auction. This time you can see 115 Bitcoin shorted at peak or bottom of this wick compared to 0 buyers, whereas price lifted off of that level, showing that the auction had failed and trapping these shorts at the lows. But you can see we are finding obedient sellers in the order books here, a couple 500 Bitcoin being limited into short positions, and we have that bigger sweep level that I've been talking about for so long below us on the charts here, and this is a level I do expect to get grabbed, so do not be surprised if Bitcoin pulls back in this range here, and this is where I would be looking to go bigger on a long. If price is able to swing fail this level with a nice failed auction, that would be a very safe long setup in my opinion, as long as you're using that wick as your invalidation, because you have so many supportive buyers on this level. You can see being limited into Binance, all of these walls, and I've already gone ahead and calculated the total amount of Bitcoins in this range, and what we see here is around $1 billion worth of limit long orders in the order book, which is going to act as massive support, and I do not expect price to want to accept anywhere down into these lower limit walls. We are most likely just going to sweep this level up here, and I would not be surprised if he can't even get his order filled and we just sweep above these limits and these guys have to take out their limits to FOMO in higher. I would not be surprised to see this play out here on the charts at all. This is a very common thing we see happen, is that when we have big buyers in the order book, price doesn't even want to get down to fill them, and they inevitably will take out their orders and push up price higher. And there is also the very legitimate scenario in which we do not even go down and test any of this, because as you can see here, we've already gone through 2 sweep levels, gotten back above both of them, and we are now holding this as support. So as long as this is to maintain as support and we do see buyers stepping in here, I wouldn't be too surprised at all if this in fact is your low, especially because we do have such a clean failed auction at that level. Now I want to get into the altcoin market, but before that, I gotta say I am not worried about this drop whatsoever on Bitcoin, and I have no reason to be bearish at all right now. I am certainly not panic selling anything. If anything, I'd be panic buying right now, because the S&P has in fact made an all-time high today, signaling the continuation of this parabola like we've been talking about, where we do go into that final below off top of the S&P, where you will most likely see expansion into the market, into your risk on assets. And I truly do believe the most euphoric phase of the market is still ahead of us, and we are about to enter a complete blow off top for all of our assets. And this drop we're seeing on crypto right now is the water being pulled back from the ocean before the tsunami hits. Someone commented that in a previous video, and I thought that was an amazing analogy. So yeah, I cannot be bearish whatsoever with the S&P doing what it is doing, and Bitcoin is certainly going to follow traditional finance more than ever with those ETFs, and I fully expect it to also go into this blow off top along with the S&P, even if it is an upthrust after distribution, and we should see that expansion in the market. And I think this altcoin season is about to melt faces and capitulate all of those bears that think they're about to get away with shorting Bitcoin. And let's talk about the altcoin market, because it has broken down here. This is something that I said I didn't really want to see happen. I wanted to see this wick get held, but after seeing how this has played out and knowing that we are going into FOMC day and this volatility is to be expected to grab that liquidity before a potential rally to the upside, I'm not too worried at all that this wick has gotten broken, and we have gone ahead and swing failed these 3 lows back here extremely bullishly, because how these lows were formed makes them very poor. I mean, whenever you have wicks at an identical level, it is likely for it to get swept, just like we had back up here. Very similar idea. We also had green vectors to the upside within a range, and like I was saying earlier, you like to retrace those vectors and clean out the market before heading to the upside. So this is not bad to see at all. Another thing we'll take note of is we've been looking at this golden pocket. We wanted to see that get broken, but it has acted as resistance pretty nicely, and we haven't been able to quite get through it. But after a rejection of a golden pocket, what is most likely to happen if you are bullish? Well, it's to pull back to your bullish golden pocket. So if we pull swing low to swing high, you can see here we have gone ahead and actually back tested golden pocket. So mathematically, let me just pull these fibs again, and you can see this is mathematically what you want to see in a bullish uptrend. Just like this before heading on up higher, and as you head up higher, this golden pocket gets moved up, and this is just bullish accumulation until we do enter the final phases of the parabola, which will be on a back test of your value area high, which sits around here before sending absolutely vertical. So yeah, I'm sure sentiment is very low today, and you guys might be panicking like, OMG, we're breaking down. Are we starting to deviate previous cycles, and has the top already come in? And I gotta say, there is nothing to worry about right now. It is just FOMC volatility, the flush of leverage to get people to capitulate before the final rally where we do send into price discovery. And if anything, I would be FOMOing into these red candles right now because we have the S&P breaking out and there's no reason to be bearish. But of course, we can't predict the future. We got to take stuff day by day. If we do start breaking down here and making lower lows than these wicks, then of course, yeah, you are going to be deviating previous cycles and it is time to kind of panic sell. But as of right now, while we are at a make or break moment, I think we're going to make it, and my sentiment remains bullish. And if you have any questions about anything I talked about in this video or just want to join the community for this channel, link to my Discord is in the description down below. And with that being said, thank you all so much for watching, and I'll see you all in the next video.